Right. The first thing I'll talk about is the title of the conference. Bricks to Brinks is that we think it's time to start to push ourselves a little bit more, as opposed to say we're frontier, and the rest of the question is how do you go from being a frontier market to the next level, and what should we be aspiring to? And that's why we put the name there, so people can think, wow, it could be Brinks rather than Bricks. And then the real conversation is very much focused about having the right people in the room, the right policymakers, the right regulators, the right investors, and the right corporates. And people speak very frankly to themselves. This morning, we've been very lucky to have the coordinating minister of the economy. We had the CEO of AMCON. We had the DG of SEC. We also had the CEO of the stock exchange. We had the DG of the DMO. We had a foreign law firm with us. So it's a bit difficult for us to say we didn't have a real conversation because those are the people who are making the decisions. And one of the things which we've taken as a key mantra to us in FBN Capital is that we're not going to complain about these things. We're going to talk to them. We're going to help build the structure because we're here. This is us.
All right. So obviously your business is investment banking. Obviously the market has been depressed for a while, at least the secondary equity market. Even new issues, capital issues on the equity side have been very thin. On the debt side, we've seen a lot more activity on the state government side, but even for the corporate, it's still been relatively low. Your thoughts on how the Nigerian investment banking space is going to change going forward?
Well, I'll start off a little bit from how it has changed and what the desires are. I'll take you back a little while. Research didn't exist 3 years ago, as I'm sure you knew in this market. Corporates were never as detailed as they were. Nowadays, right, you have had this shift where corporates have had to change how they behave. And that's forcing them to think about what do we need to do. When you add that on top of the fact that you have a regulation which forces you to do things in a different way, the things that the corporates could get away with previously, they can't get away with today. So for example, in terms of what your books look like, if, for example, if you're on the stock exchange, if you don't produce your accounts, Mr. Onyema suspends you from the stock exchange. So corporate ends up doing the right thing. So in terms of actual products that people like us end up intermediating in the market, you find out that there will actually be more things to do because the regulators are saying you have to all do things properly. So as opposed to being able to pretend, as we saw pre the banking crisis, where a lot of the banks were able to pretend that everything was okay. You can't do that anymore. So from our perspective, that's going to be key. In both the equity market, I think there's definitely a raft of equity offerings coming to the market. I don't think it's the old style bank, I'm raising 100 billion story. I think it's the conversations about the agricultural sector, the agricultural processing sector. There have been lots of conversations, there were lots of hints today about what is going on in the telecom sector. You do have the Nigerian oil and gas upstream entities. We're only starting to build the first ones. The Seplats of this world, the 700s of this world, who won't have listed before, who have not listed before, who also are looking to come to the market. And then when you add on top of that, the bond market, you've had a situation where previously we didn't have a yield curve. Now we have a yield curve. A question to the panel today was, when are you going to open a 20-year-old bond? That's a strange question for Nigeria because previously it was 18 months or 2 years and you're out. That question is raised because you have the pension industry, which is growing very quickly, which is now saying we need products on the other side. So what is going on is that you have a demand, which now the job for people like us is help create the supply. The challenge you've had for most operators, if you talk to a corporate and they say to you, and you say to them, how aren't you going to raise a bond? And they say, well, there's no point, we'll talk to a bank. You people will not raise the money. Nowadays, when you have a pension industry which is there to take up a lot of the supply, and very much in the timelines that a corporate requires, I think exciting times are ahead.